Hey traders, Ron here, Traders Academy. And as you know, it's our goal to coach and train traders of all levels. Typically we do that through our podcasts, our blogs, our meetups, and our webinars. But a few weeks ago we had the idea to put out through social media a question to all of you asking, what is your biggest challenge or obstacle that's preventing you from creating consistent trading results? And the response was overwhelming. So what we decided to do was take those responses and create a series of mini courses, each one answering a specific response. So we hope you enjoy these, hope you find them informative, and thanks for watching. Welcome to mini course 8, Forex, how to select a currency pair to trade. And the question was, picking the right pairs and getting the entries that I want. I tend to have issues when trying to execute my trades. So to start off, Forex is a complex market to trade, but at the same time it's a market you need to be trading, and Forex will require two things from you. First, it requires you to be very skilled at technical analysis because with Forex you would depend heavily on the charts just to survive. And second, you would need to be well informed on global events. You would need to be aware of events happening in all major countries, and at least the ones you want to trade. And this will be much more expansive than what you have been required to do for either equities or commodities. But the good news is that all three of the major markets are interconnected. So the better informed you are, the better you will be at each of those markets. And what's required for Forex will directly apply to the other two, especially to commodities. So for this mini course, I will assume you understand how the Forex market works, since your question was about how to select a pair to trade. Because of that, I will not go into any of the basics of Forex. Now, picking a pair to trade can be done in one of two ways, or in some cases, maybe a combination of both. First, your decision should be based on some geo event. For instance, if it appeared that, say, Great Britain's exit from the EU was not going to go well, then you might want to short the British pound. Or if the US stock market was having a major correction, then you might want to buy some safe haven currencies such as the yen, the US dollar, or the Swiss franc. Or if a country was going to either raise or lower its interest rates, then you would either buy or sell their currency. In other words, you would buy if they're raising their rates, and you'd sell if they're lowering their rates. Now we could go on for quite a while giving out examples, but I think you get the idea behind this method. And then the second method, which is my preferred method, is to go by the charts. That means use technical analysis to make your decisions. And this will involve using an assortment of technical indicators to provide you with the following pieces of data. Number 1, identify the overall trend. Number 2, how long has the trend been in place? Is it an early trend or is it a mature trend? Number 3, is it in an orderly trend or is it an extremely volatile trend? Number 4, within the larger trend, you will have smaller trends. Is the pair about, or is it just finished, one of those minor corrections within the overall trend? And number 5, where would you place your stop if you did enter the trade, and how large of a stop loss would be required? And by doing that, it would determine the size of your risk. And there is actually one more consideration you will need to keep in mind, that is how liquid the currency pair is. As a general rule, you should stick with major currencies like the following: US dollar, Great British pound, the euro, Swiss franc, Japanese yen, Canadian dollar, Australian dollar, and New Zealand dollar. And these currencies will be the most liquid and the safest to trade. And you will find many other currencies from other countries, but they tend to be more thinly traded, which for you would mean it would be harder to get in and out of a trade, and the spread between the bid and ask will tend to be wider. So it would be my advice to stick with the above listed major currencies. In fact, the euro-US dollar pair is the most widely traded and therefore the most liquid pair of all of them. Matter of fact, it's like trading the SPX in the equities market. So I think that we've covered about all we can with slides. It's now time to go into our trading platform and look at some of the charts and see what's tradable. Now in the past mini courses, we have always gone into our Thinkorswim platform, but for Forex, I prefer to use a different trading platform. Even though Thinkorswim can trade Forex, it's very primitive as far as what it can do. My preferred trading platform for Forex is the MetaTrader 4 platform. And the good news is that this platform is offered by most of the larger Forex brokers. So it's not owned by one brokerage firm like Thinkorswim is, which is owned by TD Ameritrade. So just check with your Forex broker and see if they offer the MetaTrader 4 platform, and switch over to it if you're not already on it. So now let's move over to the trading platform. Okay, here we are in our trading platform, MetaTrader 4. And maybe what I'll do first with you, I would like to explain I don't use a lot of indicators on my charts when I do Forex. I basically use a combination of 3 moving averages and a parabolic SAR. That's pretty much all that I use. And if I was to turn off my candles, you'll see that I have the 55 right there. I have the 15, the blue, and 5 is the red. So 5, 15, and 55. And then the dots are the parabolic SAR. And that, along with the candles, is pretty much all that I use. Because the major theme that I'm trying to identify and follow is nothing other than the trend. And as we've said before, the trend is your friend. And we want to identify the trend, and we want to trade with the trend. So that is really all that we're needing to identify, other than the actual timing of when to enter and when to exit. So what I like to do is, and this is a good example because currently I'm not in any Forex trades. So let's scan the major pairs. Remember, we talked about we only want to deal with the ones that are the major currency pairs, not the minor ones. So let's just start from the top and look at it, and we'll just go down the list and look at all the major combinations. This would be Audi Swiss, and I'm looking at this, and as you can see right off the bat, I can eliminate it because number one, it's going sideways. I neither want to buy nor sell that. Plus, it's all over the place, so it's rather volatile, which is also a negative for me. So that one's out. Next would be the Audi Japanese Yen. Again, now this one is trending a bit, but it's very choppy, as you can see. So it would be hard to get in this and not get whipsawed around. So this one does not really draw me in either. Here we have the Euro Audi. Again, more sideways and very volatile. So this is not something I'm looking for. And if I can, when I look at these charts, as soon as I see one thing that would make me not want to trade it, I'm gone. Next would be Euro Swiss. Again, very volatile. And let me give you another tip too. Anything that has a Swiss franc in it tends to be volatile most times. Next be Euro Yen. That one is moving up, but it's not going quite as steep as I would like, and plus we got some good volatility up and down, so it would be tough to get in this trade and not get whipsawed around. And when I say whipsawed around, what I mean by that is, if we had our stops in place, it's very easy for this thing to move quickly, hit our stops, take us out, and turn right around and head back the opposite direction. So when I see swings of that magnitude rather frequently, then I know that that would be a tough one to trade and profit from. Dollar CAD. This one is also all over the place, except for currently it's in a nice trend. So currently it is, but at the same time, this trend is a very mature trend, so we may have already missed that move. That's why I said in the slides, you want to determine if it's a newly formed direction or if it's a mature trend, which means sometimes it may be too late for you. Next being dollar Swiss. That was almost the same as the dollar CAD, heading down, but this has also had quite a bit of move here, so I'm looking for something a little fresher. Dollar Yen, 2 safe haven trades, still kind of volatile, so I'm still shying away from that. Don't get discouraged though, we'll keep looking. Now this one, Audi US dollar, and also I'll get another clue. Right now, as I'm filming this, the dollar has recently started to weaken. A lot of that can be due to the fact that the Fed has recently had a series of rate cuts, and as rates go down, currencies become less popular. So that could be one reason. So it maybe a few, I don't know, 2 or 3 weeks ago, 4 weeks, maybe a month ago, let's say, all major currencies started to gain strength against the U.S. dollar because the dollar was weakening. So in this case, what we see here is as we were heading down here, the dollar was gaining against the Australian dollar, but now we're starting to make a slight comeback. But the question is, would we want to get in here? So what I would say on this one is we made a high right here, and Another thing I like to do is eliminate the candles sometimes, and what I want to see in the moving averages is I want to see this configuration here. If it's in an uptrend, I want to see the 5 above the 15 and both of those above the 55, which it is now. So what I would like to see for me to want to enter this trade would be for this correction. Remember I said we're going to have minor corrections within the overall larger correction. So if this comes down and reverses and heads back up, if it can exceed this swing high that we had right here, and I mentioned swing high, we talked about those swing points in great detail in other mini courses. So if you don't know what that means, go back and look at some of our other mini courses. But if we can reverse and head back up and close higher than what the swing high was right here, then I would enter this trade. So this is one that I would put down on my list to follow and keep an eye on. Moving on down, skip some Euro US. Very volatile, but this one always is. This is always, as you can see, very volatile. And when you get into this thing, you always end up getting whipsawed and taken out, and just to watch it continue on in the direction you thought it was going to go anyway. Pound Audi. Now this one has a lot involved with it right now because of the Brexit deal, so it could be all over the place. And basically, with this one, I wouldn't touch it, only because of the fact that anytime a news flash comes out about Brexit, whether sometimes you get one that says it's positive, looks like it's going to go through fine, other times it looks like they're going to have a hard Brexit. According to which way it goes, the pound goes with it. So I think until this Brexit actually happens one way or the other, I think I might avoid anything with the pound in it. As you can see here, obviously on here the pound fell, so obviously something came out probably relating to a hard Brexit. So again, I'd stay away. Pound CAD, same deal. Bad news for the pound, for the Brexit probably. Took a tumble, so I'd still stay away from it. Pound US, same deal. Same deal. Euro pound. Right here, Euro pound. So at this point, right here, so that was probably again news. Still stay away because of the Brexit deal. Euro CAD sideways, nothing really there to make me want to either buy it or sell it. We'd still get whipsawed and taken out pretty quick as soon as we got in. Pound Swiss franc. Again, the pound took a tumble there. Same news that we've seen in the other ones. Pound yen. Same happening here. And you see some of the size candles we have here related to the pound. These are all news-related spikes. Swiss yen. Now this one would be another one that I would look to get in on the long side as soon as this minor correction within the overall trend plays out, if it does. So here again, the 5 is above the 15, both of those above the 55. Got good separation. With this thing turned around and went back up again, and we end up closing higher than this level right here, I would enter this trade long. So again, you may not always be able to get into a trade on the day you start looking at charts, but you can comprise a list of currencies, of pairs that you want to watch for a specific event, or a specific number to be reached, whatever, and then enter the trade at that point. Audi CAD, sideways, nothing really there to get into. Audi New Zealand. We missed this move. This would have been a good one to make, but now we've gone sideways. So chances are we missed the move and we're leveling out now. So nothing there. CAD Swiss, very volatile. Would never get in that one. CAD Yen. Possibly, again, we're in an uptrend. We take the candles away. We're in an uptrend, a slight uptrend here. We did make a new high. If we can close above this level right here, I would consider going long that pair. Again, we have to break that swing high. Euro New Zealand. Now this one here, I definitely would get into this if, in this case, we'd go short. But what I want to see is this minor correction within the overall trend to come back down, close below that level right here, and I would go short. Again, but this is a nice strong 5s below the 15. Both of those are below the 55, which is what we want for a downtrend. And if that came down and again made a new low below the prior swing low, which is right there, I would go short that pair. That's the third one we could put on our list. Let's see, pound New Zealand, same spike we saw there with the news, we avoid that. New Zealand CAD, this one, move the candles. You can see that our 5s above the 15, both above the 55. Good uptrend. It's been going on for a while with several minor corrections along the way. So in this case, once again, when this reverses and if we close above this level here, I would go long. So that's 4 pairs that we have on our watch list. New Zealand Swiss, same here. If we close above there, I would go long. Good uptrend. Take the candles away. See the 5s above the 15, both above the 55, with minor corrections along the way. So if we can reverse and head back up and close above that level, I would go long that. New Zealand Yen, same deal. Excellent uptrend here. Some small correction here. If we close back above here, I would go long. So that's another one for our list. New Zealand US, same exact thing I just said. If we close above here, if we reverse and come back up and close above that level, I would go long that pair. And that may be it. Yep, as far as major pairs, that may be it. So you now have a list, and you can go back and review this as many times as you need to. What we've done now is we have created a list, a watch list of currency pairs. You can do it many ways. You can come back each day. These are daily candles that we're using, so they're only going to get a new candle once a day. So you can come back one time each day, check those specific pairs, see if they've done what you're looking for it to do. And if they do, then that's the time. That's the entry signal you needed. And you can go either long or short, whichever we had determined we were going to do. I think most of them were long, and I think there was one short. Or you can set alerts that will either send a text to your phone or send you an email when those price levels are reached. Then you can come back at that point and enter the trade if you like. Now, a couple more things that I want to cover before we log off the platform. One being, we talked earlier about identifying where your stops would be placed so you could identify what your risk would be. And that is one of the functions that I use the Parabolic SAR dots for. So the Parabolic SAR indicator places dots on the screen. When the dots are above the candles, that's an indication to sell or to go short. When the dots are below the candles, that's an indication to be long, whatever it is you're looking at. So when you enter a trade, so let's say we entered the trade to go short here on this movement down. If we zoom in just a little bit, that's all we can go. Okay, so the dot would have been, let me make that crosshair right there. So the dot would have appeared on this candle here. So we would have entered somewhere in this area to go short. So before you actually place your order, you need to know where your stop is going to be. So that is another function of the Parabolic SAR dots, is if we had entered, if we were going to enter somewhere around here to go short, our stop loss would be at the corresponding dot directly above it. So as you see here, if you hover over it, it would tell you that that location is 0.67897. But more importantly, if you were thinking of entering, say right here, you would want to hold your left mouse key down from there and drag it up to that dot, and that would tell you that it is 1,161 pips. Remember, I'm sure I qualified you in saying that you understand how Forex works. So the distance from where you entered to where your stop would be 1,170 pips. So 1,170. Now, as you also know, you have 3 lot sizes that you can trade Forex currencies in. You have your micro, lot, your mini lot, and your standard lot. And the corresponding would be the micro is 10 cents per pip, the micro is $1 per pip, and the standard is $10 per pip. So you could then calculate all of that. So 1,170 times 10 cents, that means your loss, your risk that you were taking would be $117 if it went up and hit your stop. If we had times 1, that's $1,170. Or times 10 would be $11,700. So you can see, based on your account size, would determine what lot size you trade in. And if you're learning and you're not experienced in Forex, or it's in your early stages, I would always suggest that you trade the micro lots until you're more comfortable, until you got a better track record under your belt. So $117 loss, that would be a very acceptable risk. So that's how you would tell where to put your stop and calculate your risk. Now the second factor that you want to pay attention to is, remember I said in the beginning that you want to trade with the trend. So another key element is, I like to go up here and get rid of my candles. Anytime where we talked about this earlier, when the 5 and the 15 are below the 55, so when these two shorter term moving averages are below the longer term moving average, in that case, the way I look at it is, we are in a downtrend. So I'm only going to take sell signals from the Parabolic SAR. In other words, I'm only going to be in the trade when the dots are above the candles. So we would ignore any opposing signals. So we would ignore this buy signal. In other words, if it flipped from below to the other way, if it flipped from above to below, I would just be in cash. And I would stay in cash until it flipped to the top side again. Then I would once again go short and ride that down. I would ignore this, and I would ignore this, and so on. So then, for instance, when we got here to where the 5 and the 15 are above the 55, then that's a signal to only be taking long signals. So I would only take the signals that are on the bottom side of the candles that indicate going long. And if we had anything opposing that, like this one here or this one here, I would ignore those and go to cash. So, and then once we got the dots remained back below again, I would once again go long. So again, if the two shorter term moving averages are below the 55, you're only going to take sell signals, and you're going to be in cash on the opposite side. And if they are above the 55, the two shorter terms are above the longer term, you're only going to take buy signals, and you're going to ignore any sell signals, and in those cases you would be in cash. So that is how you would trade with the trend, and you would not trade opposing the trend. So between the moving averages and the Parabolic SARs, that gives me all the information I need to know when to enter the trade, where my stop is going to be, where the trend is, and that the fact that I am trading with the trend. So at this point, we have our watch list created to where we have certain pairs that we're watching for the price action to perform in a certain way, and then we either go short or long, whichever we determine. We know we use the Parabolic SARs to calculate where our stop loss is going to be. We can drag our mouse from location entry, if right here, up, and it'll give us the total amount of pips that we can calculate based on the lot size that we're trading. And then we can also look at the moving averages without the candles to determine which signals we're going to ignore and which ones we're going to trade with. So hopefully that now gives you everything you need to know to figure out what pairs to enter, how to choose a pair to enter, which pairs to ignore, as we talked about on some of those when they're too volatile. You're looking for good solid trends, and then once you pick the pair, once the price action does what you're waiting for, then you can calculate how much risk you're going to take on the trade, if that risk is acceptable and you do actually want to take the trade, and then also determine that you are trading with the trend, not against it. So that's it. Hopefully this helps, and good luck.
So hopefully this has answered your question and shown you how to use the charts to look for good Forex trade setups.
As I stated in the beginning, I depend heavily on the charts to make my Forex trading decisions, and I would encourage you to spend as much time as you can getting as familiar as you can with the MetaTrader 4 platform and the indicators it offers. This, like I said before, is what I think is the best platform for your trading Forex. And in fact, there isn't even anything close as far as I'm concerned. Now, if you need more help with this, just submit another question and I'll be glad to do another mini course for you. Otherwise, stick with the charts and good trade practices and you should do just fine. But in case all of this still seems too large of a task for you, I would like to suggest another option. Instead of taking all this on by yourself, you should consider coaching. Coaching is something that is used by every successful professional, at the same time something that is almost never thought about for the average person. But think about it for a second. Golfers have coaches, boxers have coaches, sports teams have coaches, skiers have coaches, actors have coaches, even rock bands have coaches. And the list could go on, but I think you get the idea. And one thing you may not know is that traders have coaches too. In fact, I can promise you that all successful professional traders have coaches. In fact, all large brokerage firms employ in-house coaches to support their in-house traders. And when I worked on Wall Street, I used their in-house coach all the time. So whatever path you decide to take, I just want to encourage you not to give up on your dream to become a trader. There is not another business in any field that has the potential to produce the kinds of gains possible as a trader. Remember, it's all about following the process, breaking it down into workable sections that you can tackle with ease. And remember, if you don't feel like going it alone, consider coaching. We want to thank you for watching. We hope you enjoyed it and hope that the information that you got can in some way help improve your trading. And if you'd like to watch the entire series for free, all you have to do is go to tradersacademy.org. That's tradersacademy.org. Fill out the form, give us your email address, and we'll send you a link to the entire series. Plus, we'll give you a free copy of our Reprogramming the Trader's Mindset book, and we'll give you access to a free 1/2-hour private coaching session. So if you'd like to take advantage of this offer, again, that's tradersacademy.org, tradersacademy.org, and thank you for watching.